To all my dear students, how are you all? So we are here for the last chapter of auditing and ethics subject for the revisionary classes. The chapter is chapter number 11, which is ethics and terms of audit engagement. So students, before starting with today's chapter, I would like all of you to reply whether you have learned till chapter number 10. Quickly send in your replies. Quickly send in your replies. So I can see Om Krishna Gupta, Swati, these students already joined. Just a minute. Swati, please refer as a standard asset you want me to explain in bank audit, right? So I'll explain that. Otherwise, okay, I'll do that. Please tell me whether till chapter number 10 you have revised, learned each and everything, test your knowledge, your test your understanding questions, your case study, everything. I want you to do each and everything from your module. So, today we'll be starting with chapter number 11, which is ethics and term of audit engagement. And student, for this series of revisionary classes for auditing and ethics subject, we have a last session which is scheduled on Wednesday. That session is dedicated to chapter number 11, but there, whatever are your doubts relating to the earlier chapters or SA710 that is left. So I'll be taking up that also because we'll be left with ample time in that session, right? So Swati, your doubt also I'll take up in the next session. Others also, if you have any doubt relating to any chapter of this subject, please bring your queries and we will definitely discuss all those queries, right? So the chapter that we are going to start today is ethics and terms of audit engagement. And students, the weightage of this chapter as is given is 8 to 10%, right? Just a minute. So the weightage is 8 to 10%, a very important chapter and a very interesting also. Right? So in general terms, the term ethic, it means what? The moral principles, right? Moral principles that govern a person's behavior, right? And ethics are really very, very important, and auditing profession is no exception. So in auditing profession also, we need professional ethics, right? So now let us try to understand as to why there is a need for professional ethics in auditing profession. So see the society which consists of government, the shareholders, then creditors and bankers. So the society, they trust on the services of a chartered accountant, right? And the purpose of conducting an audit is to enhance the confidence of the intended users, that is the society, which I have just said. And students, professional ethics is based on morality, and human have a tendency that they may place their personal gain over and above the service, right? So the professional body to which a human being belongs, for example, like if I talk about the chartered accountants, so that professional body has to interpret the concept of public interest, right? So the services are to be rendered in public interest, right? And the respect and confidence of any profession, it is dependent upon how strictly the ethics are adhered to by the members of that professional body, right? So professional ethics, it seeks to protect the interest of the profession as a whole, and it acts as a shield that enable us to command respect. See, the public, if they are going to rely on the auditor's report, if they have the confidence on the auditor's report, they have something in mind that these CAs who are providing such service, they are abiding by the rules and regulations, the professional ethics, the code of ethics, right? So every member, whether in practice or in service, they need to abide by, they need to follow the code of ethics. And if such code of ethics, students, if that is not followed, then it may lead to certain disciplinary mechanism. Like there can be fines, there can be suspension of membership, there can be removal from membership or other disciplinary actions, right? So, professional ethics, as I like to summarize this, like professional ethics as it is required for any other profession. So, auditing profession is not an exception to this. We need professional ethics in auditing profession also, right? Now, tell me the rules that we have to follow, as in, or I'll say the auditors have to follow. Tell me principle based rule and the rule based approach to the ethics. So, principle based approach and the rule based approach. What do you understand by that? Principle based and the rule based. You must have come across these words in your while understanding your law subject. Send in your replies. So, see, students, the ethics that the members of ICAI they have to follow. So there can be a principle based approach or there can be rule based approach to ethics. Principle based approach. So basically here it means that the member needs to comply with the spirit of ethics. That is, what is the meaning that is hidden in the ethics or the guidelines that are given, right? And it requires any accountant to exercise professional judgment in every situation, right? Based on their knowledge, skill, or expertise. So, professional judgment will be required in order to evaluate every situation and to arrive at any conclusion, right? Now, rule-based approach means that you need to strictly follow the rule, the words that are mentioned, right? That is, it is a very narrow outlook. So, so the spirit of ethics, the basic purpose behind which that ethic was created, that may be overlooked. Why? Because you have to strictly follow the ethics that are mentioned, right? And as such, the rule-based approach to ethics, these are what? These are really very rigid because you cannot differ from them. What is mentioned, you have to follow them, right? So it is not possible to deal with every practical situation relying upon the rules, right? So there can be principle-based approach to ethics and there can be rule-based approach to ethics, right? So what should be done? Let me just take you through the module for this. So therefore, it is necessary that the spirit of code is followed. That is understanding the substance over form. What is been what is the intention, why such ethic has been created, that is to be considered, right? So principle based approach versus rule based approach, whereby in principle based approach the spirit of the ethics, that is the intentions behind creating that ethics, that is to be complied with, right? And auditor will apply his professional judgment based on his professional knowledge, skill and expertise. However, rule based approach is a narrower outlook, or you can say it is rigid and it cannot be applied in each and every situation, right? So the spirit of the ethics may be overlooked sometimes. So therefore, it is necessary that the spirit of code is followed, right? Now, students, when we talk about professional ethics, there are various fundamental principles of professional ethics, and more specifically, there are 5 principles of professional ethics. So, professional accountant or is required to have a behavior which is expected out of these fundamental principles. That is, he should comply with integrity, objectivity, professional competence and due care, confidentiality, and professional behavior. And students, we will be discussing about each and every fundamental principle one by one. And this is you can always get a 3 mark, 4 mark, or 5 mark question, and you may be asked to write about integrity, or you can say integrity and objectivity, or any of these fundamental principles. So it is a important question. So when an auditor is conducting the audit of the financial statements of a client, he is required to consider these fundamental principles of the integrity, right? So by integrity, we means that, so I'm using the term professional accountant. So the professional accountant, he needs to comply with integrity. Now you tell me what is meant by the term integrity. Swati Om Krishna Gupta, you are correct. So integrity, I can say that being straightforward and honest, right? So the professional accountant should comply with integrity. I mean that he should be straightforward and honest in his professional and business relationships, right? It implies that there should be fair dealings and truthfulness on the part of the professional accountant. And in case the professional accountant is aware that any report, return, or communication is with which he is going to associate that is materially false, or that is misleading, or certain information is omitted which makes it misleading, so the professional accountant should not associate himself with that report. When I say that the professional accountant should not associate himself with that report, I mean that he should not take any assignment related to that particular return, report, or communication when he is aware that the information contained is materially false or misleading, or it contains statement or information which is provided negligently or omits the required information, thereby making it misleading, right? So I'll repeat the integrity fundamental principle. So it basically means that the professional accountant should comply with what? He should be straightforward and honest in his professional and business relationship. It implies fair dealing and truthfulness on the part of the professional accountant, and he should not knowingly be associated with any reports, returns, communication, or other information which he believes that the information contained therein is materially false or misleading statement, or contains a statement or information which is provided negligently or omits the required information, thereby making it misleading. Now, students, when you will be asked to write, let's say you get a 3 mark question to write on integrity. So these are the keywords that should be there in your answers. And believe me, students, as such, these are not any technical words, right? So straightforward, honest in business and professional relationship, fair dealing, truthfulness, knowingly not getting associated with reports, returns, communication that he believes is materially false or misleading, right? So as such, these are not technical words. So try to make summary or try to highlight the keywords so that you can just put in your energy towards remembering these keywords, right? So is this integrity part clear? Right? So basically, straightforward and honest, fair dealing, right? Yes, Swati, correct. Honest. Om Krishna Gupta, correct. Loyal, honest, right? Okay, so this was integrity. Now the next is objectivity. Being objective means, tell me, send in your replies, what is meant by being objective? Quickly send in your replies. So being objective means that, let me just have a look. Not prejudiced, Swati is saying. Others also please reply. Others also please reply. Naman Goyal, Om Krishna Gupta, Sunil Ganga Dev, Shoaib, please reply. Not to compromise with the judgment, Shoaib is saying. Not based on bias, Om Krishna Gupta is saying. Absolutely correct, right? So here I can see Tunishka is saying not he should be unbiased. Right, correct. So see, objectivity as a fundamental principle, it requires the auditor not to compromise his professional judgment because of biasness, conflict of interest, or undue influence of others, right? So the professional accountant should not undertake. So wherever I have mentioned PA, this is basically what? Professional accountant. Just a minute. Okay. So the professional accountant should not undertake any professional activity if the circumstances and the relationship will lead to undue influence on the accountant's, the professional accountant's professional judgment. Right. So auditor should not to compromise with his professional judgment because of biasness. So he should not be biased so that he is giving a judgment which is, let's say, in the favor of the client who has appointed him. Conflict of interest. His interest is vested in the client organization. That is why he's changing his professional judgment. Undue influence of others. The client is in a position to influence the auditor. That is why he is giving such a professional judgment or such an opinion, right? So this should not be the case. So if we summarize that, objectivity requires that the auditor should not compromise his professional judgment because of three things. What are these three things? Biasness, conflict of interest, and undue influence of others. And how will that be possible? Simply that the professional accountant should not undertake such activity if the circumstances and relationships are such that that is going to undue influence his professional judgment. Simple. So we are saying that he should not compromise with his professional judgment. What is the solution? That he should not undertake such activity that is going to lead to compromising of his professional judgment. So this is with respect to your objectivity. Then is professional competence and due care. So professional competence, now the professional knowledge of the auditor or the professional accountant and the skills that he's going to use while conducting an audit and his competent will come into picture. So professional competence and due care. So it requires a professional accountant to attain and maintain professional knowledge. So attain and maintain, update that professional knowledge, skill and competence, right? So it basically, the purpose behind this fundamental principle is to ensure that the client is receiving a competent professional service, right? And it should be based on technical and professional standards and the various relevant regulations, right? So the auditor is required, see, professional competence we have talked, and then is due care. So the auditor is required to act diligently. What is meant by diligently? So it basically means the responsibility to act carefully, thoroughly, on timely basis. So these three things: carefully, thoroughly, and on timely basis as per the requirement of the assignment, right? So the auditor needs to act diligently as per the applicable technical and professional standard, right? So see, professional competence and due care. And when I student ask you to learn the keywords, just be smart learners. Just see that from the words professional, your professional knowledge, one of the keywords, the professional standards, competence, that is the client should receive competent professional service. Due care means you need to talk about being diligent. Diligently, the auditor is going to perform the audit as per the technical and professional standards. And what is meant by diligence? The responsibility to act carefully and thoroughly on timely basis as per the requirement of the assignment. So this was the third fundamental principle, that is professional competence and due care. Next is confidentiality. So, as the name suggests, to keep the information confidential. See, students, the as per this fundamental principle, the professional accountant is required to respect the confidentiality of the information that he has acquired as a result of professional and business relationship, right? And shouldn't this principle of confidentiality is particularly with respect to public interest? Why? See, it facilitates free flow of information. So when the client is aware that yes, the auditor or the professional accountant, he is going to keep confidentiality of the information, then only there is going to be what? Free flow of communication between the client and the professional accountant, right? So there is an understanding that the information that has been shared will not be disclosed to a third party, right? So confidentiality requires that the professional accountant respect the confidentiality of information that is acquired as a result of professional and business relationship, and it serves public interest. Why? And it also facilitates free flow of information from the client to the professional accountant. Why? Because then only there is an understanding that the information will not be disclosed to third party. However, students, there can be three situations whereby the professional accountant may disclose the information. Please tell me, we have studied about this topic in the 10 chapters that we have covered so far. Something about this topic we have already covered. So please tell me, when can a professional accountant share the information? Sri Lakshmi, correct? Being diligent means careful. Please tell me, when can an auditor share the or disclose the information to the third party? Students, I'm waiting for your replies. Required by legal authority, Swati is saying. See, so the auditor may, the confidential information may be disclosed when it is required by law, when it is permitted by law and authorized by the client or the employer, and when it is out of the professional duty of the auditor to disclose the information and the same is not prohibited by law, right? So if it is required by law that the auditor needs to furnish certain information to, let's say, any regulatory authority, he will have to do that. When it is authorized by the client, right? And then the professional duty right to disclose when the same is not prohibited by the law. Okay, is it clear? So the confidential information may be disclosed under these three circumstances. Is it clear? Tanishka, you are correct, right? And the last is with respect to professional behavior. So we have done integrity, objectivity, your professional competence and due care, and confidentiality, and last is professional behavior. See, out of a professional behavior will be expected. So, and the last but not the least, one of the very important fundamental principle is professional behavior. So the professional accountant is expected to comply with the relevant laws and regulations. And see, the professional behavior, what is it meant? What is meant by this? So he should not engage into any activity which he knows will bring discredit to the profession or bad name to the profession. Right? So he should not knowingly engage in any employment, occupation, or activity which will impair his integrity, objectivity, or good reputation of the profession. So professional behavior will be that that he's following all those fundamental principles. So following integrity, following objectivity, bringing good reputation to the profession is what? Professional behavior. So these are the 5 fundamental principles which are really very, very important. And students, here I've tried to concentrate on the keywords that you always ask me that, ma'am, how to write the answers, how to get good marks, or how to clear the exams with flying colors. See, student, these are the keywords, and these are really very, very simple, as such, no technical language, right? So complying with relevant laws and regulations, avoid any conduct where the professional accountant accountant knows or should know might bring discredit to the profession. The professional accountant should not knowingly engage in any employment, occupation, or activity that impairs his integrity, objectivity, or the good reputation of the profession. Quickly tell me, are these five fundamental principles clear to all of you? And in fact, not only the understanding, certain learning should be done here only. Well, it should be in your mind that, okay, when I'm talking about professional behavior, I will be talking about integrity, objectivity, and good reputation to the profession. I will be using the word discredit to the profession. So tell me, are these things clear to you? Swati Singh, yes. Others also please reply. Others also please reply so that we can proceed further. Om Krishna Gupta is saying yes. Shoaib is saying yes. So abhi tak in this chapter, students, we have done topic of need of professional ethics for the auditing profession and the fundamental principles and principle based and rule based approach, right? And more specifically for this chapter, since we have good time to cover this chapter, my endeavor will be on understanding as well as on helping you to learn to pick up or highlight the keywords, right? So Tunishka is saying, ma'am, it is crystal clear. So that is good. So now independence of auditor, a very important topic. So here in this chapter, we'll be talking about independence of auditor and the various threats to independence, right? Then the various safeguards to independence. So 2, 3 topics we'll be covering, and I'm sure that your understanding and learning both will be done once we are through with this chapter. So see, students, when we started the definition of term audit, we said that it is an independent examination, right? So independent examination will be done by an independent auditor, right? Now, what is meant by independence of auditors, right? So basically it says that the professional integrity, being straightforward, being honest, and being independent, these are essential characteristics for any profession, and the same applies to accounting auditing profession also. Now, what is meant by independence? See, if you just look at the Hindi meaning, it means swatantra, right? So, what is meant by independence? So, it means that the judgment of the person is not subordinate to the wishes or directions of another person. Who can be another person? Another person who might have engaged him, that is the person, or his or to his self-interest, right? So he should not be subordinate to his own wishes. That is because his self-interest is there, or he should not be subordinate to the wishes of the other person, that is the client in this case, right? So let us read this definition again. So independence means judgment of a person is not subordinate to the wishes or directions of another person who might have engaged him or to his self-interest. So independence may we are saying that he should not be subordinate to the wishes of his to his own wishes, that his own self-interest should not be there. So this is the first thing, and second is to the person who might have engaged him, right? So this is the definition of the term independence. And students, if the rules are made with respect to independence, right? So the rules are made with certain objective that the independence should be achieved. But merely by making the rules, merely by saying that these are the rules that the auditor needs to follow with respect to independence, we cannot achieve independence, right? So if I keep on telling you that you should not cheat, you should prepare, my just telling you that you should not cheat or you should prepare for your examination, I cannot be 100% sure that yes, you will prepare for your examination. That preparation for the examination, that zeal should come from within. Same way, when we talk about any professional accountant, yes, rules are there that are to be followed. But that thing to follow to of being independent, that yes, I will be independent, that thing should come from within. That is, independence is a condition of mind, of personal character of the professional accountant. Are you able to understand? Yes, rules are there, but merely the rules by themselves cannot create or ensure existence of independence. Why? Because independence is a condition of mind and of personal character. So I'm not talking about you. If there is a student who do not want to study, who is not studying, right? And if I keep on telling him that you have to study, you have to study, you have to study, he or she will not study unless and until something is there from within. So that thing of studying, or here more specifically, the thing that I should be independent, that fact should come from within, right? So it is a condition of mind and of personal character, and it should not be confused with superficial visible standards of independence which are imposed by law. So as such, law is there, but they as such will not confirm, or you can say they cannot ensure that independence will be there unless and until it is within the personal character, within the mind of the professional accountant who is conducting the audit. So that is why we say that there are two perspective of independence to auditors. That is independence of mind and independence in appearance. So the next topic that we are going to cover is what? Independence of mind and independence in appearance. So अभी तक हमने independence में क्या पढ़ा? We have read the definition of the term independence, whereby we saw that judgment of a person is not subordinate to the wishes or directions of another person who might have engaged him, or to his self-interest, right? And rules as such by themselves cannot create or ensure existence of independence. You may get a 3-mark question here, that why, or explain this right line. Just a minute. That rules as such themselves can, here this line, create ensure existence of independence. So why? Because independence is a condition of mind and of personal character, right? So it should not be confused with superficial visible standards of independence imposed by law. And that is why we have two perspective to independence of auditors, that is independence of mind and independence in appearance. So what is meant by that? You tell me what is meant by independence of mind, if you have any idea. Quickly send in your replies. So Tunishka, Sri Lakshmi, and here who all are Om Krishna Gupta is saying decision without being influenced, not influenced easily. Swati is saying. Shoaib, Sunil Gangadev, Naman, please reply. See, independence in mind. Just a minute. And independence in appearance. See, independence of mind means that when the auditor is conducting the, or he's going to accept the audit of an organization, first of all, in mind, he should be satisfied that yes, I am independent. Independence of mind. That is the state of mind of the professional accountant, or more specifically auditor. It permits him to provide an opinion without being affected by any influences. His state of mind should be such that, right? So independence of mind, that his state of mind is such that he'll not compromise with professional judgment. And that state of mind is going to allow the professional accountant to act with integrity, exercise objectivity, and professional skepticism. So what is professional skepticism? We are going to discuss that topic in detail, but as of now, just try to understand that being alert, having a questioning mind is what professional skepticism is, right? So I'll repeat independence of mind. So independence of mind That is state of mind. See, let's say if you are conducting the audit of ABC Limited, and let's say your father is one of the directors of that company. Now, in your mind itself, you are not independent, na? You are not independent, na? In your mind itself, you are saying that, okay, this is my father's firm. How can I give such an opinion? Right? So the state of mind is not permitting you to give an opinion without being affected by the influences. Your state of mind in this situation is such that you cannot act with integrity. Straightforward nahi ho sakte. You cannot exercise objectivity. You cannot exercise professional skepticism. You cannot ask the questions again and again to, let's say, Mr. A, who's your father in this case, right? So the state of mind should be such that you can follow the principles of integrity, objectivity, and professional skepticism, right? So independence of mind means state of mind which permits the provision of opinion, that is providing the opinion without being affected by influences, without compromising the professional judgment. So the state of mind should be such that it allows the individual to act with integrity, exercise objectivity, and professional skepticism, right? This is what independence in mind, that is within your mind, you should be able to act independently. Okay? Now, independence in appearance, right? Independence in appearance means that to a third party who is having knowledge of all the relevant information and the safeguards that you have applied with respect to independence, any third party who has the reasonable knowledge of the entire setup, your being auditor, the other party being a client, it should not look to that third party that you are not independent. So in independence of mind, I'm saying that you should be independent in your mind itself. It should not look to you that I am not independent. How I will act with integrity, how I will apply objectivity or professional skepticism. Independence in appearance. Now I'm not talking about you. I'm not talking about your state of mind. I'm talking about the other person's perspective, how you are appearing to the other person. So, independence in appearance is avoidance of facts and circumstances which are significant enough for a reasonable, informed third party having knowledge of all relevant information and safeguards that are applied, that third party would reasonably conclude that the firms or the members, again, integrity, objectivity, or professional skepticism has been compromised. It should not happen. It should not look like that, right? So let's say you are conducting an audit in a client's place, and on every second or third day, you are accepting gifts from that, let's say, the accounts manager. Now, let's say the persons who are sitting there, it may appear to them now that you are accepting gift every second day. How can you be independent? So you should appear to be independent, right? So, or let's take another example. Suppose you are there are certain appeals of the same organization, income tax appeals of the same organization, and you are appearing before ITAT, let's say, for this client. Now, on one hand, you are appearing before the ITAT for this client. On the other hand, you are conducting an independent audit. So, can you appear independent in this case? Answer is no, right? So now what is meant by independence in appearance? It means that you as the auditor, so how will you appear to be independent? You will avoid those facts and circumstances. So you will not take that assessment work of ITT, or you will not accept those gifts, right? So avoidance of facts and circumstances which are significant, that a reasonable informed third party having knowledge of all relevant information and safeguards applied. So we are not saying that any person who is going on a road, we are not talking about that person. We are saying third party having knowledge of all the relevant information and the safeguards applied, he would reasonably conclude that the firms that is the audit firms or the members, again the same thing, integrity, objectivity, and so these are the same things, right? Integrity, objectivity, and professional skepticism have been compromised. Is it clear? So independence of mind, independence in appearance. Of mind is that within your mind, your state of mind should be such that it should allow you to work with integrity, objectivity, professional skepticism. Independence in appearance means that the third party भी ऐसे नहीं कि कोई भी third party is having knowledge of all the relevant information safeguards applied. He should reasonably he should not believe that your integrity, objectivity, and professional skepticism have been compromised. So this is the meaning of independence in mind and of appearance, which is really very, very important, right? So that means, in other words, so you may get a 3-mark question whereby it is quoted that independence of auditor has not only to exist in fact, but also appear to so exist to all reasonable persons explain. So so the explanation will be what? Independence of mind and independence in mind and independence of appearance. Is it clear? Right? So the relationship between the auditor and the client should be such that, first of all, so the first thing is that he is himself satisfied about his independence. Usko pata hai that I can exercise integrity, objectivity, professional skepticism. I can give my independence with opinion without being influenced by the judgments of the other. And secondly, no unbiased person would be forced to conclude on an objective assessment of circumstances that there is likely to be an abridgment of auditor's judgment. Abridgment of auditor's judgment is reduction, or that auditor is not going to apply his professional judgment, right? So relationship between auditor and client should be such that, first, he himself is satisfied about his independence, and second, no unbiased person would be forced. So see, these words, unbiased person. So we are not talking about any person who is moving on the road that usko nahi aap independent lag rahe. Nahi, we are saying unbiased person, and that too on objective assessment of circumstances, that there is likely to be an abridgment of the auditor judgment. Is it clear? Quickly tell me. Abhi tak we have done independence ka definition, then we did independence in mind and of appearance, and then this term that independence of auditor has not only to exist in fact, but also to so exist to all reasonable persons. So Om Krishna Gupta is saying, okay, others also please reply. Okay. Now, see, I'm discussing this topic, independence of auditor. Now, why is it important? Why is it important? Simple. Because the users of the financial statement, they are relying on your financials, on the audited financial statement. And if the auditor is independent, that is going to enhance the confidence of the users of the financial statement, right? So the auditor is expected to be objective in his approach, fearless, capable of expressing an honest opinion, right? So that is why we say that the independence of the auditor is dependent upon his state of mind, the character of a person, right? And students, see, independence of auditor is a very subjective matter. One person may be independent in a particular set of circumstances. However, the other person might feel that he is not independent in such circumstances. So what the auditor has to do, or what a chartered accountant has to do in such a case, he himself has to determine whether or not he can act independently in given circumstances. So this is my client, whether I can give an opinion without being influenced by others or my self-interest. And as a professional, he should not place himself in a position where he has to compromise his judgment. So these are the duties on the part of the auditor in order to maintain what? The independence of the auditor. So basically we're saying that it is dependent on the state of mind and character of the person. Because one situation, a person may feel that he is independent, the other person may feel that, okay, I cannot give an independent opinion in such a situation. So it is the duty on the CA to himself assess whether or not he can act independently in the given circumstances, and where he has to compromise his independence, he should not act in such a situation. He should not accept such an assignment, right? Now, the next topic is threats to independence. But before starting with that, I would like to you all to tell me whether you have understood whatever we have done. So now the next topic is what? Threats to independence. Send in your replies quickly. Quickly send in your replies. So the threats to independence are, again, there are 5 threats to independence: self-interest threats, self-review threats, advocacy threats, familiarity threats, intimidation threat. And you will see that from the name of the threat itself, you will be able to understand as to what is meant by that threat, right? So see, first is what? Self-interest threat. As the name suggests, if let's say I am going to accept any assignment, or I am going to continue any assignment. So whether my interest, self-interest, it can be direct financial interest or significant indirect financial interest. So we are talking about the self-interest of the auditor, right? Or the firm, or its partner, or associate. So whether any auditing firm, its partner, or any of the associates, it could benefit from the financial interest in the client, in the audit, in the client organization, right? So what can be various examples of self-interest? So direct financial interest or materially significant indirect financial interest in a client organization. So if I'm holding any security in the client organization, I'm holding a share in the client organization, so it is my direct financial interest, right? Any loan guarantee to or from the concerned client. I've taken a loan from the client. Will I be in a position to give an independent opinion? No. Undue dependence on clients' fees. Let's say a firm is there which earns, let's say 10 lakhs in, let's say in a quarter, right? Out of that, 9 lakhs is coming from one client. So there are concerns of losing that client. Then close business relationship with the audit client, potential employment with the client, contingent fees for audit engagement. So contingent fees is what? If I give this opinion, whether in the next assignment I'll get the desired fees, my fees is contingent. It is dependent upon what opinion I'm going to give here. So self-interest will be there. When self-interest of a person is involved, whether he'll be in a position to give an independent opinion, the answer is no. So this is what one of the threats to independence, right? So self-interest threat, it occurs when the auditing firm or its partner or the associate, it could benefit from financial interest in the client, audit client, right? The example can be direct financial interest or materially significant indirect financial interest in a client, loan guarantee to from concerned client, undue dependence on client's fees, concerns about losing the engagement, close business relationship with the audit client, potential employment with the client, contingent fees for audit engagement. See, if the client is saying that I'll give you an employment within my client organization, I'll make you the CFO of my account, of my company, right? So potential employment with the client organization, that is what? Self-interest threat only, right? So are you clear? So in self-interest threat, we are going to write what is it, and we are going to give these examples, right? Self-review threats. If I ask you to check your own papers, how much marks you are going to give your to your like your to your paper, how much marks are you going to give? So the answer will be 100, right? So self-review. So it occurs when during a review of any judgment or conclusion reached in previous audit. So let's say the auditor has done the work of the organization in the, so students are saying we will give 110, someone is saying we will give 120. So that is why, so I hope you are able to understand now what is meant by self-review threat. So if you are reviewing your own work, Let's say you were engaged in the internal audit department, in the work of the internal audit, or you were engaged in accounts and bookkeeping. Now, when you are reviewing your own accounts that were prepared by you, will you be in a position to say that these accounts are not presenting true and fair view? So the answer is no, right? Or let's say when any of the team member was previously a director or senior employee of the client organization. Earlier, let's say in the previous year, he was the director or senior of the of the client organization. Now he has left that organization. He has joined a CA firm. Now he is going there as an auditor. So will he be in a position to say that my work was not okay, or my work did not give a true and fair view? So the answer is no. So it occurs when during a review of any judgment or conclusion which is reached in the previous audit or non-audit engagement. So non-audit engagements can be like management services, internal audit, investment advisory services, or when audit team member was previously a director or senior employee of the client organization, right? So that this self-review threat, we can say that it comes into play when the auditor having recently been a director or senior officer of the company, or when the auditor performs services that are themselves subject matters of the audit, right? So this is another threat to independence, that is self-review threat. The third one is advocacy threat. ठीक है. So as I gave you example of what that you are appearing, you are presenting your client organization before ITAT, in income tax appeals, right? So when the professional accountant is, let's say, promoting the client's opinion, right? So the people may believe that the objectivity of the professional accountant is getting compromised. Advocacy threats. When the auditor deals with the shares or securities of the audited company, or where the auditor becomes the client advocates in litigation in case of third party dispute, like ITT wala example. So will you appear to be independent? So the answer is no, right? So the auditor will be perceived as backing the causes of the client organization, which will lead to the belief that the auditor is not acting and working objectively. Advocacy threat. So you may say that, see, in my mind, when I'll be conducting the audit, now I'll be independent. I am just appearing before the income tax authorities, and I am representing my client. But when I'm conducting the audit, I am independent. But will you appear to be independent? And we know that independence of mind as well as appearance both are required. ठीक है. So advocacy threats, it occur when the auditor promotes or is perceived to promote. So either you are promoting, or to the third party it is appearing that you are promoting the client's opinion, where people may believe that objectivity is getting compromised, right? So where people may believe, say, what is it talking about? Independence in appearance. ठीक है. So if auditor deals with share securities of audited company, or he becomes the client's advocate in litigation to third party, auditor is perceived by third party na. So this is what, by other persons. So this is what independence of in appearance, that he is backing causes of client, which will lead to the belief that auditor is not acting and working objectively. Is it clear? Is it clear? ठीक है. Then the fourth one is familiarity threat. Familiarity threat. You are too familiar with the client organization. Now, when I say too familiar, I want to say, let's say you are conducting the audit of the client organization, or you have, let's say, any business relationship with the client organization for a very long period, that now it is too sympathetic to the client's interest. So it often happens now that when you are dealing with, let's say, same client for the last 10 years, for the last 15 years, A point will come when you will not be in a position to remain uninfluenced, right? So familiarity threats, these are what self evident, that 15 साल हो गए हैं, 20 साल हो गए हैं, you are dealing with the same client, chances are there that you will become too sympathetic to the client's interest. For example, or familiarity threats can be like close relative of the audit team is in a senior position of the client organization. So let's say ABC and Associates is the firm of chartered accountant conducting the audit of X Limited. Mrs. A is, let's say, MD in the in X Limited, right? And CAA is the engagement partner. So close relative of audit team in a senior position in client or company. Former partner of audit firm is the director or senior employee of the client. Long association between the specific auditor, specific client counterparts. Acceptance significant of significant gifts, hospitality for from client, director, or employees. So gifts, hospitality will come when there will be what? Familiarity, right? Any close relative of the audit team, if he or she is in a senior position, again familiarity. Former partner of the audit firm, in director or employee of the client, again familiarity, right? So this is what your familiarity threat, right? Now, what is the solution to this? There is a concept of rotation of auditors in Companies Act 2013, whereby the auditors are required to rotate. That is, they cannot remain the auditor of the same client for certain time period is mentioned. I'm not going to discuss about that, but because that is not given in your syllabus, right? Maybe in the Companies Act you might have studied. So the solution is what? Rotation of auditors as per the Companies Act. So Swati, is it clear? So Swati is saying how to mitigate, how to reduce familiarity threat. So rotation of auditors concept is there. If you say that significant gifts are being taken, do not take those gifts, na? Right? Is it clear? And where, let's say here, do not accept the engagement. Okay, is it clear? Swati, is it clear? So this was about familiarity threat. So there is a doubt of Tunishka and Sri Lakshmi with respect to advocacy threats. So I'll just repeat that. See, advocacy threat. See, advocacy means you are promoting someone. If you look at the meaning of this word now, you are promoting someone. So when I say, so there can be two aspects. One is when I gave you example of that income tax assessments ka appeals. So before the income tax appellate tribunal, you are appearing, you are representing the client organization, and on the other hand, you are acting as an independent auditor also. So there is what? Advocacy threat. Why? Because you are promoting that client organization, a kind of, when we say you are advocating for someone, right? Also, another example is dealing in shares and securities of the audited company. So, on one hand, when you are dealing in the shares, you are buying and selling the shares of the audit company, let's say on a large scale, you are advocating, you are promoting that particular company shares and securities, right? So again, that will be what? Advocacy threat. So whose doubt was it? Tunishka, is your doubt clear? Sri Lakshmi, is your doubt clear? Both the students, please reply. Advocacy is, so I told you that there can be two situations. So auditor dealing with share securities of the audited firm, or he becomes the client's advocate. Sri Lakshmi is saying clear. Tunishka, you also reply, is it clear? So basically, you're promoting the client organization on one hand, you are, and on the other hand, you are saying that I'm giving an independent opinion. ठीक है? and familiarity we have done. Swati, is your doubt clear? Now the last one is intimidation threat. So when you intimidate someone, it means you are threatening someone, right? So when intimidation threat occurs when the auditor is deterred is what? Discouraged from acting objectively with an adequate degree of professional skepticism. That is, we can say auditor is threatened that if you ask question, professional skepticism is, I told you that you are asking, you are being alert, you are asking questions to the client organization, you are basically having a questioning mind. Now, when you are asking questions, you are being told that please do not ask this question. Otherwise, we are going to take back this work from you. We are going to appoint some other auditor, right? So when there will be reduction in the work, there will be reduction in the audit fees, right? So, or in matters, for example, certain disagreement with the management over, let's say, application of appropriate accounting policies, right? But management says we will not change the accounting policy, and if you force us, we are going to reduce your work, right? So this is what intimidation threat, threatening someone. So it occurs when the auditors is deterred is discouraged from acting objectively with an adequate degree of professional skepticism. उसको कुछ पूछने भी नहीं दिया जा रहा. Professional skepticism, objectivity, दोनों ही he is not in a position to apply. And it could happen when there is threat of replacement. We will hire some other auditor over disagreement with application of appropriate accounting policies, or pressure to disproportionately reduce the work, thereby reducing the audit fees, or threatened with litigation. Right? Is it clear? Is it clear? So this is what your intimidation threat. Is it clear? So we have done the 5 kinds of threat, that is self-interest threat, self-review threat, advocacy threat, familiarity threat, and intimidation threat. Now, as one of the student was asking me, ma'am, how to mitigate these threats, how to reduce these threats. So there are certain safeguards to independence. Threats will be there, but auditor can apply certain safeguards. Why? Because it is the auditor's responsibility to remain independent. So what are safeguards? So who will apply safeguards? It is the auditor. Now, what are safeguards? So safeguards are the actions either individually or in combination with other actions which the professional accountant should take so as to effectively reduce the threats to his independence so that he is able to comply with the fundamental principles. He is able to comply with the fundamental principles to the acceptable level, right? So the auditor is going to apply certain safeguards. So what are the guiding principles that are to be applied when the auditor considers as the safeguards to independence? Okay. Now, see students, first of all, it says that the public has the quality, that is the society has the confidence in the quality of audit, and who can maintain that quality? It is essential for the auditor to always maintain that quality. And how will the audit quality maintained? If in mind and also in appearance the auditor is independent, right? So before taking any work, auditor should conscientiously, he should consider whether there are threat to independence. Okay, so auditor should carefully consider whether there are any threat to independence, and if the threat exists, so either auditor can desist from that task. Desist is he should refrain from taking that task, he should eliminate that task, or he should put in place safeguards, that is reducing the threats to an acceptable level. right? And whatever safeguards the auditor is going to take, he should record them. Why? Because it will act as an evidence that he has complied with the ethical requirements, right? And if it is auditor is not in a position to apply any safeguards in proper manner, then the last thing is he should not accept the work. He should desist from that work, right? So this is with respect to the guiding principles that is to be followed. Just be with me on page number on page number 11.13. There is test your understanding 3. I want all of you to go through that. Test your understanding 3. CA Raman Gupta is offered appointment as auditor of a company. One of his distant uncles held some shares in the same company. Holding of such shares by a distant relative is not prohibited under provisions of law and does not affect his independence. So when he has been offered appointment, and at that moment his uncle, who is a distant relative, and that is okay, right? Before he could accept appointment, he received unfortunate news of the death of his uncle, who had died without any children. He came to know that he was nominee of these shares having substantial value. It landed him in a tricky situation. What should be proper course of action for him? So, as such, distant relative ne, if he is holding any shares, that is not a problem. But before accepting the appointment, he received unfortunate news that his uncle has died, and now he is become the nominee of the shares, right? So, how he is going to deal with such a situation? So, is it a threat to independence? Quickly give me your answers in yes or no. Quickly send in your replies. So, Swati is saying yes. Others also please reply. Okay. So, yes, it is a threat to independence, right? Now, what kind of threat is this? Out of the 5, Som Krishna Gupta has answered it correctly. It is self-interest threat. And who has also given the correct answer? Swati has answered it correctly. Okay. So what should he do? Either he should desist himself from taking that task, or he can eliminate such threat. How? He hasn't accepted the appointment now. He may, before accepting the appointment, sell off such shares, right? Because on the date of appointment, we are going to see whether he is having that shares of the client organization. So before accepting the appointment, or the person, Raman Gupta, he should sell the shares, right? So let us just have a look at the answer that is given in your module. Test your understanding 3. So quickly, we will just have a look at it. This is 3rd. So see, when threats to independence exist, the auditor should either desist or the task or eliminate the threat, or at very least put in place safeguards which reduce the threats to an acceptable level. Holding of shares involves financial interest and is in the nature of self-interest threat. He has come to hold shares due to nomination made by distant relative before accepting the appointment. Considering above, he should take steps to eliminate the threat by selling shares immediately before accepting appointment. Holding of shares of the company for which he is offered appointment as auditor constitute threat to his independence. ठीक है. So he should sell the shares immediately before accepting the appointment. Is it clear? Swati, correct. Shoaib, correct. Om Krishna Gupta, correct. Here Sri Lakshmi, correct. Tunishka, correct, right? So, students, there are other questions also which I would really want to discuss with you. We'll do one thing here. We'll take a break of 10 minutes, and after the break, I'll discuss the other test or understanding questions and we'll further proceed with essay 210, that is agreeing the terms of audit engagement. So, a quick break of 10 minutes here, and then we will discuss the questions and then start with essay 210. break. So before the break, we have done the various kinds of threat, the safeguards, right? And Tunishka, you have a doubt that, ma'am, she's saying that when auditor buys a share, that is self-interest. That is true, Tunishka. Buying a share, holding the security, share or securities in the client organization is what? Your self-interest, right? But the word that is used here is what? Dealing. When the auditor deals with the shares or securities of audited company. So advocacy, I told you, it means promoting the client organization. So promoting may we have seen that litigation may you are representing your client, or let's say dealing may it can be like you are encouraging others to buy the shares of the client organization, or you're assisting the client organization in selling of any of their you can say companies, right? So you're dealing. Is it clear? As a professional, you are doing that. Is it clear, Tunushka? So when the auditor as such hold the share of the client organization, then it is self-interest threat. But when you are encouraging others, you are acting, let's say, as an investment advisor, right? That will be dealing with the security shares of the audited company. Tunushka, is it clear? Okay, so these were the various threats, and students just have a look at this test of understanding on page number 11.8 also. CAP Suryakantam has conducting audit of accounts of an entity for a particular year. ICAI has issued a letter to him relating to certain matters concerning audit. He didn't even bother to reply to the letters despite reminders. Discuss the fundamental principle governing the professional ethics, which is disregarded by him. So we have done various fundamental principles like your integrity, objectivity, confidentiality, professional competence and lucre, and professional behavior. So quickly tell me, do not look at the answers that are given in your module. What is this? Om Krishna Gupta, Shoaib, correct. Others also please reply. Tunishka is saying, okay, it is clear now. Tunishka, Sri Lakshmi, Swati, Sunil Gangadev, please reply. So see, he is not bothered to reply. So it is one, basically his professional behavior is not correct now. So one of the fundamental principles that is disregarded by him is what? Professional behavior. Test your understanding too. A chartered accountant in practice issued a certificate showing original cost of plant and machinery installed in premises of client of for 9 CR to save some regulatory fees for his client. However, original cost of plant and machinery was 15 CR as per the records of client. Which fundamental principle governing professional ethics is violated? So send in your replies. Tunishka, Sri Lakshmi, correct for test your understanding 1. Now give me the replies for second. Swati, Om Krishna Gupta, correct. So see, he is not being honest here. So this is what? Integrity. Right? Clear? Correct. Okay. Third, we have already understood. Now let us just quickly look at test your understanding 4, which is given on page number 11.14. A CA received about 40% of his total fees from a single client. Discuss how it could affect independence of chartered accountant as an auditor. What are such types of threat referred to as? Tunishka, correct. Now read test your understanding 4. Swati, correct. Om Krishna Gupta, correct. Others also please reply. So 40% of his fees, total audit fees from a single client. So let us just have a look at the various kind of threats. Self-interest threats, right? Undue dependence on clients' fees. Is it clear? Is it clear? So this is what self-interest threat. Retest your understanding 5. CA Murli Madhavan provides accounting and bookkeeping services to the leading NGO engaged in environmental protection. He is also offered audit of accounts of NGO. Identify and discuss what kind of threat to independence may be involved in accepting such an appointment. Shoaib, correct. Now, give me answer for test your understanding 5. Om Krishna Gupta, Swati, correct. For test your understanding 5. Others also please reply. So CA Murli Madhavan provides accounting and bookkeeping services, right? So let us just look at the various kind of threats. So see what are the various kinds of threat? Self-interest threats, self-review threats, advocacy threats, familiarity threat, and intimidation threat, right? So self-review, when you are reviewing your own work, ठीक है? Non-audit engagement. Is it clear? So the answer to test your understanding 5 is what? Self-review threat. ठीक है. Tunishka, correct. Now read this. Excuse me. Test your understanding 6. The auditor of a company have only relied upon management representation letter regarding treatment of certain tax matters under appeal by the company. The auditor have not carried out any other audit procedures to justify management's treatment of the said tax matter under appeal in the financial statements. See, just a minute. I think one topic is left. Wait. Do not read this. We are still to cover professional skepticism. So we have done till test your understanding 5. Now let us have a discussion with respect to professional skepticism. See, being skeptical is when you are doubting things. Okay? Professional skepticism, being doubtful. Right? So it basically means, see, if any of the documents is been provided to you by the client organization, so you should not just keep that document with you and just rely on that document. You should apply your mind. You should ask questions that, okay, if this is the rate that has been applied, why? Okay, if this is the price that has been offered, why? Were there any quotations asked for? Okay, if this is the firm or the company to which, let's say, any huge machinery has been sold, why were any quotations there? Were any tenders there? Or if anything has been sold as a scrap sale, why this have been sold out as a scrap? So there should be what questions that should come to your mind. So in fact, we were discussing this point, this test your understanding 6 now. Just go through it. Then I'll take you through the topic. See, the auditors of a company have only relied upon management representation letter regarding treatment of certain tax matters under appeal. The auditors have not carried out any other audit procedure. That is, they have taken the document, they have relied on it. What is lacking on part of the auditor in such a situation? It is being of questioning mind, being alert to a situation that why only management representation is there, why no other document is there, why they haven't asked a why from the management, they have just relied on the document. And so what is lacking? Being of questioning mind. That is, being professionally or applying professional skepticism. ठीक है? Now, what is meant by professional skepticism? So, see, when you are asking a question, it is basically your attitude, which includes questioning mind. That is being alert to the conditions that may indicate possible misstatement, whether due to fraud or error. And when we say being alert, it also includes critical assessment of the audit evidence. So see, management representation letter is it is an audit evidence, but a critical assessment whether it is sufficient appropriate audit evidence. ठीक है? So when you are going to write a definition of term professional skepticism, it is the attitude that includes questioning mind. One keyword. Being alert to conditions that may indicate potential misstatement, possible misstatement or potential misstatement due to fraud and error. Second point. And the third, critical assessment of audit evidence. Audit evidence तो है, but not just taking it and keeping it in file, but in just assessing that audit evidence, whether it is sufficient and appropriate or not, or whether further audit procedures and further audit evidence is required, right? So the auditor should plan and perform an audit by applying professional skepticism, recognizing the circumstances that may cause financial statement to be materially misstated. Right. So let's say if the auditor asks the management that I want to send external confirmation to 5 parties, management say do not send it to 3 parties. I'll give you written representation. Auditor says okay, done. I'll do that. This is not applying professional skepticism. Why? Because the question should be why? Why are you asking me not to send these external confirmation? Okay. So this is what applying professional skepticism, being alert to condition that may indicate the possibility of potential misstatement, whether due to fraud or error. So he should be alert. Why management is refusing, is asking me not to send confirmation request to these 3 debtors. There can be possible misstatement due to fraud or error, right? So she should be alert to audit evidence that contradicts other audit evidence. So if the confirmation that is received from the debtor and the statement or the debtor's ledger that is appearing in the client organization, they are contradicting. So auditor is going to ask a why, right? He will be of questioning mind. He will be alert to the situation. He will critically assess the audit evidence or being alert to. So you may get a 3 or 4 mark question that the auditor should be alert to various things. So what are these? Audit evidence that contradicts other audit evidence. Information which brings question to the reliability of documents and the responses to inquiries to be used as audit evidence. Let's say auditor receives one of the responses to inquiries. Orally, management is saying something else. In writing, management is giving something else, right? So the condition that may indicate possible fraud. The circumstances that need for audit procedure in addition to requirement of essays. Essay says that this audit procedure you will perform, you will get the sufficient appropriate audit evidence. But auditor is not getting sufficient appropriate audit evidence by applying that procedure. There is a need for applying additional audit procedure. Why? ठीक है? So more specifically, auditor needs to be alert to these situations. That is where the audit evidence contradicts other audit evidence, information that brings question to the reliability of documents and responses to inquiries to be used as audit evidence, condition that indicate possible fraud, and circumstances that there is a need for audit procedures to be performed in addition to the required by essay. ठीक है? Now, if auditor maintains professional skepticism, he is of questioning mind all the time, this is going to reduce risk of. So what is the importance of maintaining professional skepticism? See, it is going to reduce the risk of overlooking unusual circumstances. So let's say there is a scrap sale, huge amount of scrap sale. So if auditor is not alert, he's not of questioning mind, he may overlook, ignore this unusual circumstance, right? Over generalizing when drawing conclusion from audit provision. Auditor may over generalize when he's drawing conclusion from the audit procedures. ठीक है? Using inappropriate assumptions when determining the nature, time, and extent of audit procedure and evaluating the results. So when the auditor is not applying his questioning mind or professional skepticism, this may happen that he may overlook unusual circumstance. He may overgeneralize when drawing conclusions from audit observations, or he may use inappropriate assumptions in determining the NTE of audit procedures and evaluating the results. So if auditor maintains the professional skepticism, it is going to reduce the risk of these three things. Is it clear? Right? And as I've told you that professional skepticism is critical assessment of audit evidence, which means in order to that considering whether the audit evidence is sufficient and appropriate, right? So auditor may accept the records or documents as genuine unless auditor has reasons to believe to the contrary. So if he has any reasons to believe to the contrary that such document is not genuine, then he has to apply his professional skepticism and he has to consider what further audit procedures has to be applied, right? Now, or if the when auditor obtains any information, he'll see whether it is reliable or not. And if there is a doubt with respect to the reliability of the information that is to be used as audit evidence, he will investigate it further and he'll see whether any modification or addition to the audit procedures is required. Also, when we say that the auditor has to apply professional skepticism, it does not mean that it is not expected that auditor will disregard the past experience of honesty and integrity of the management and those charged with governance. We are not saying keep on asking each and everything, keep on asking each and everything. If you are aware that auditor is aware that the management provides the information which is correct. Management acts with honesty and integrity. So we are saying that auditor will not ask that, okay, this document, these are the signs of the official, these are correct now. So we are not saying auditor is not expected to disregard the past experience, right? But also on the other hand, if auditor has a belief that management is honest and have integrity, however, it will not relieve auditor from the need to maintain professional skepticism. See, we ask question from the management about, let's say, authenticity of a document that, okay, tell me whether this document is obtained from the, let's say, any party only, this invoice is obtained from so and so party. So it says that the auditor is having the past experience with respect to this client that the management and those charged with governance, they act with honesty and integrity. So auditor keep in mind that past experience also. But since you are having a good past experience with the management and those charged with governance, it will not relieve you from the duty to maintain professional skepticism. You cannot say that last years mein to they provided me data with honesty and integrity. You need to be alert throughout the audit process. Okay? So this was with respect to your professional skepticism. Is it clear? Is it clear? Om Krishna Gupta saying correct. Shoaib, Swati, Naman Goyal, Sunil Gangadev, others also please reply. So this was with respect to professional skepticism, right? Now the next topic that we are going to cover is agreeing the terms of audit engagement, essay 210. Very important essay and very interesting also, right? So see, when the auditor is accepting the work of a client, the audit engagement. So what is audit engagement? Engagement or agreement to act as an auditor with respect to, let's say, the financial statements of a particular client, right? So there will be certain terms of audit engagement. So I have written terms of audit engagement as TOA. So, and with respect to those terms of audit engagement, both the client as well as the auditor, they should agree. Okay? Agreeing the terms of audit engagement is the name of essay 210. ठीक है. So SA 210, it deals with auditor's responsibility in agreeing the term of audit engagement with management or those charged with governance as appropriate. So what is the objective of the auditor? See, auditor will accept an audit engagement. This is audit engagement. Or he'll continue an audit engagement only when the basis upon which audit is performed has been agreed. So see, there is a basis that, let's say, one can be that certain preconditions are there. If those are available, those are present, then only auditor is going to accept the audit engagement. Let's say management says that I'm not going to prepare the financial statement as per the applicable FRF. So the basis on which the audit is going to be conducted, that is not present. Let's say management says I'm not going to provide you with all the information. I'll not give you any additional information that you need. So the basis on which you are going to conduct the audit, those preconditions are not existing now. How can you conduct the audit? So this essay is all about all these things. So the objective of the auditor is to accept and continue the audit engagement only when the basis upon which the audit is to be performed has been agreed. And what is that basis? That the conditions establishing whether the preconditions for an audit are present and confirming the common understanding between auditor and management or those charged with governance where appropriate of terms of audit engagement. So what are the bases? Two bases. Preconditions should be there and common understanding should be there. See, let's say management says that with respect to the terms of audit engagement, we are not agreeing to this point. Now, there is no common understanding now. Both the parties are not agreeing. So, can auditor take up that engagement? So, what is the basis? The basis is two things. That is the preconditions should be established, preconditions, and then there should be common understanding. Right. Now let us discuss as to what is meant by the preconditions for an audit. So the preconditions are that management is going to use an acceptable FRF. This is a precondition for an audit. See, if management is not preparing the financial statement as per the applicable FRF, can auditor conduct the audit and obtain reasonable assurance that financial statements are prepared with respect to financial applicable FRF? So one of the preconditions is management uses the acceptable FRF in preparation of financial statement, plus agreement of management and those charged with governance to the premise on which the audit is conducted, right? Now, when the auditor has to ascertain that whether these preconditions exist or not, what will auditor do? When the auditor has to consider whether the precondition exists or not, so he will find answers to few questions. What are those? He will determine whether financial reporting framework is acceptable or not. Right? If accounting standards have been applied, whether that is to be applied. If Ind AS have been applied, whether that was supposed to be applied. If IFRS was to be applied, whether the same has been applied. So determine whether the FRF is acceptable or not. Plus, he'll obtain an agreement from the management that is, it acknowledges and understands its responsibility. Understands and acknowledges also that its responsibility, management's responsibility for preparation of financial statement in accordance with applicable financial reporting framework and wherever required for fair presentation. For design, implementation, control, maintenance of internal control, which management considers necessary to enable the preparation of financial statement so that they are free from material misstatement, whether due to fraud and error. See, these lines, the language that is to be used now, to this should have been imbibed in your mind. Na? Financial statement that are free from material misstatement, whether due to fraud or error. Okay? So when the auditor has to establish whether the preconditions are present or not, auditor shall first of all determine whether financial reporting framework is acceptable. He'll obtain from the management its acknowledgement and understanding about its responsibility for preparation of financial statement in accordance with the applicable FRF and wherever required fair presentation. That is, if it is a fair presentation framework, and internal control which the management considers necessary to enable preparation of financial statement free from material misstatement, whether due to fraud and error, and to provide auditor with access to all information any additional information that is required, and unrestricted access to persons within the entity. So it should not happen that management say that auditor, this is the information that I'm going to give. Uske baad I'm not going to give you any information. You cannot discuss anything with any employee of my organization. So these should not happen. If this is the case, auditor is not going to accept or continue the audit engagement. Is it clear? Is it clear? Quickly send in your reply, students. Okay, so these were the precondition, and when the auditor has to establish whether such precondition exists or not, he'll determine all these things, right? Now, agreement on engagement, audit engagement terms, right? So we are on page number 11.16 of your module. Now, why is it required that both these client and the management or those charged with governance and your auditor, they should agree with the audit engagement terms? So it says that, see, except where required by law, that except where it is statutory requirement that audit is to be conducting, audit is a matter of contract between auditor and client. For example, let's say partnership deed, or right. So it is important partnership firm ke case mein, and it becomes important that the auditor and the client should have a clear understanding about the nature of engagement. See, for example, in case of partnership deed, the appointment of the auditor, the various aspects relating to appointment of the auditor are contained in partnership deed, who is going to appoint the auditor, right? So since in case of various audit, the matter of contract between the auditor and the client, these are basically set in the contracts of such arrangements. So it is important that the auditor as well as your client, they are clear about the nature of engagement, what services the auditor has to give, and it should be in writing. That is very logical. Further, it should specify the scope of work. An auditor needs to agree with the terms of audit engagement, and such audit engagement should be recorded in the form of audit engagement letter or any other suitable form of written agreement. Further, the engagement letter should be sent by the auditor to his client. Very, very important. It should be sent by the auditor to his client. And why is all these things required? In order to reduce the possibility of any misunderstanding. So quickly have a look at one of the sample that is given in your module on page number 11.17. So see, it should be, this is an example of engagement letter, and it should be sent by the auditor to the client. So to the board of directors of Prestine Products Limited, the objective and scope of audit, right? And later on we are going to see as to what this audit, what this engagement letter will consist. Let me just first show you that point. So the letter is going to include what? The objective and scope of audit of financial statement. What is the objective of conducting this audit? What is the scope? The responsibilities of auditor, the responsibilities of management. So yahi par we are making it clear that, see, we are not responsible for preparation of financial statement. We are not responsible for implementation of internal control. It is the responsibility of the management. Identification of applicable FRF for preparation of financial statement. Reference to the expected form content of reports, that these are the expected form of and content of reports, plus a statement that in such circumstances the report may differ in the expected form and content, that in these circumstances there may be difference in the expected form and content of report, right? Now just have a look. So objective and scope of the audit, right? So we are pleased to confirm our acceptance and an understanding to the engagement terms. The objective are to obtain reasonable assurance, right? Then responsibilities of the auditor will be to conduct the audit in accordance with essays, identify and assess the risk of material misstatement, right? Then obtain an understanding of IC. So we are talking about SA 315 here, but we are telling the management here, okay? appropriateness of management use. So we are telling the management about our responsibility, auditor's responsibility, now responsibility of the management, preparation of financial statement, internal control to provide us with access to all the information, right? Our fees will be so and so, out of pocket expenses, reporting, okay, and then the signatures by the member, the engagement partner, okay, is it clear? Okay, so this is with respect to engagement partner, sorry, the engagement letter. And see, it says that where the law and regulation prescribes in detail the terms of audit engagement. So let's say in any law or regulation with respect to particular company, it is specifically mentioned, let's say on the website, that with respect to this particular let's say any organization, these are the terms and terms of engagement with respect to this particular entity. There, the auditor need not record them in writing except for the fact that this law and regulation is applicable and management acknowledges and understands its responsibility. Because there it is already mentioned, so do not write it again, but mention these facts that this law and regulation is applicable and management acknowledges and understands its responsibility, right? Now, a very simple question: what if the preconditions for audit are not present? If the preconditions are not present, so management saying we will not provide you with this information, or we will not give you access to unrestricted access to all the persons within the entity, so discuss the matter with the management. Simple. Unless law regulation requires, auditor shall not accept the proposed audit engagement. Okay, discuss it with the management, and if such is the case, do not accept the engagement unless it is compulsory, mandatory by law or regulation, right? If auditor has determined that the financial reporting framework applied for preparation of financial statement is unacceptable, or if an agreement of management is not obtained on matters relating to understanding of responsibility of management on preparation of financial statement, internal control, or providing all information unrestricted access, if these two are the situations, see, these are what? These are nothing but preconditions only. So if these are not existing, so first of all, discuss it with the management. And secondly, if law regulation, unless law regulation requires, auditor shall not accept the proposed audit engagement. Is it clear? Is it clear? Now, if prior to audit engagement acceptance, auditor has not accepted the audit engagement as such, there are limitations that are imposed on the scope of audit. Management says you will not check, let's say, the debtor balances. You will not check these things, or you will not communicate with the debtors, right? So limitation on scope prior to acceptance is there. If management or those charged with governance imposes limitation with respect to terms of proposed audit engagement, we are not going to provide you this unrestricted access. And auditor believes that if such a limitation is there, it will result in auditor to disclaim an opinion. That is, he will not be able to obtain sufficient appropriate audit evidence, and he will have to disclaim an opinion. Auditor shall not accept such limited engagement unless required by law and regulation. This is the point that we have already covered also, right? Now, let's say the engagement has been accepted. After that, there is a change in the terms of audit engagement. So if there are change in the terms of audit engagement, auditor is not going to accept it unless it is reasonable, it is justifiable. Okay. Now, when can we say that it is justifiable? When justification exists? So it says that such a request for change may result from change in circumstances affecting the need for the service. The circumstances have changed. Misunderstanding about the nature of audit originally requested, or restriction on scope of audit engagement imposed by management or the circumstances. Yes, Swati, you are correct. So if there is such a change, auditor will consider whether there is justifications. If there is such a request, auditor will consider whether it is justifiable or not. What are the implications of such restriction on the scope of audit engagement? Right. So we have seen what can be the reasonable situations. However, when can it be unreasonable, not reasonable? When the change relates to information which is incorrect, incomplete, otherwise unsatisfactory. So the information which is incomplete, um, incorrect or otherwise unsatisfactory, with respect to that particular information, the management is asking the auditor to do some changes. Now, in that case, for example, the auditor is unable to obtain sufficient appropriate audit evidence regarding the receivable. Entity asks the audit to change the audit engagement to review engagement to avoid qualified disclaimer of opinion. See, audit opinion may though, if the auditor has to give an opinion, it may lead to qualified or disclaimer of opinion. So management says that since you are not able to obtain, let's say, sufficient appropriate audit evidence with respect to receivables of the entity, please do not give qualified and disclaimer of opinion. We will change this audit engagement to one which gives a lower level of assurance. For example, review engagement. Okay. Now, whether auditor should agree to that or not. So it says that what should auditor consider before agreeing to change the audit engagement to engagement providing lower level of assurance? So prior to completing the audit engagement, if auditor is requested to change audit engagement to an engagement which provides lower level of assurance, he will again determine what, whether it is reasonably justifiable or not. And before agreeing to the change, auditor will assess his legal and contractual implications, like whether he needs to communicate it to those charged with governance or regulatory authority. And where the auditor concludes that it is reasonable justification to change the audit engagement to review or to related services, auditor will consider whether the work that he has done till the change of work, whether that is relevant for the change engagement, and the work that is required to be performed and the report that is to be issued, now that will be in accordance with the revised engagement. Simple. So that means that in order to avoid any confusion to the reader, he will not include reference to the original audit engagement. Why? Because now it has been reduced to what? A review engagement. So he will not refer to the original audit engagement. He will not refer to the audit procedures that has been performed as per the original audit engagement. Clear? If the terms of audit engagement are changed, then the auditor and management, they shall agree on and record the new terms of audit engagement in engagement letter or other form of suitable written agreement. Simple. Just listen to this as a story. Now, let's say the auditor is saying, I cannot agree to the change in the term of engagement. And management is saying, we cannot allow you to continue as or you can say there is lack of permission from management to continue the original audit engagement. Management or auditor is saying I'll continue with the original audit engagement. Management is saying you cannot continue with it. What is the option available? Withdraw from audit engagement where possible under law and regulation, and determine the obligation, contractual or otherwise, to report the circumstances to other parties like the those charged with governance, shareholders or the regulators. Is it clear? Is it clear? Okay. I'll do one thing before moving further with the topic of recurring audit. I'll just repeat it, as many of you are saying that, ma'am, please repeat few topics. Just a minute. Okay. So agreeing the terms of audit engagement. SA 210, agreeing the terms of audit engagement. So it deals with auditor's responsibility in agreeing the terms of audit engagement with management or where appropriate those charged with governance. What is the objective of the auditor? Auditor is going to accept or continue the audit engagement only when, very important, only when the basis upon which the audit is to be performed has been agreed. What is the basis? Two things. That is the preconditions, establishing whether precondition for an audit are present and confirming the common understanding between the auditor and those charged with governance with respect to what terms of audit engagement. Now, when we say establishing the preconditions, so what are the preconditions? That is used by management of acceptable FRF in preparation of financial statement and agreement of management, those charged with governance to the premise on which audit is conducted, right? That this is the premise on which audit is to be conducted, that both management or where appropriate, those charged with governance, they agree to it. Now, when the auditor has to establish whether precondition exists, he shall do various things. That is, determine whether FRF is acceptable, obtain agreement from the management, that is acknowledges and understand its responsibility for preparation of financial statement in accordance with applicable FRF and fair presentation, that it acknowledges and understands its responsibility for implementation of internal control, that management considers necessary to enable preparation of financial statement to be free from material misstatement as whether due to fraud or error, that it acknowledges and understands its responsibility to provide auditor with access to all information, additional information, and unrestricted access to persons within the entity. Clear? Now, why this agreement on audit engagement terms is important? So we say that except where required by law, audit is a matter of contract between the auditor and the client. I'll give an example of a partnership firm. It is important that the auditor and the client, they should each party should be clear about the nature of engagement. It should be in writing and it should have what specify the scope of work. Further, it can be recorded in the form of audit engagement letter or any other suitable form of written engagement, and it should be sent by the auditor to the client in order to avoid any misunderstanding, so that the possibility of misunderstanding can be reduced, right? This is important. What all topics, what all are points are included in the engagement letter? Important. This point is important as well as easy. Objective and scope of audit of financial statement, responsibilities of auditor, responsibilities of management, identification of application of FRF for the preparation of financial statement, reference to expected form, content of reports, and a statement that in these circumstances, the report may differ in the expected form and content. Where the law and regulation prescribes in detail about the terms of audit engagement, the auditor need not record them in writing again. Just a minute. But there will be a reference to 2 points, that is the fact that the law regulation apply and that management acknowledges and understands its responsibility. Clear? Now, if the preconditions are not present, so Abhi auditor has not accepted the audit engagement. So he'll discuss with the management, and unless law and regulation require, auditor shall not accept the proposed audit engagement, right? So what are the preconditions? Same, that auditor determines that FRF applied is not acceptable or no agreement is obtained from the management with respect to the responsibilities of the management. Simple. Now, if it's limitation on scope, there is certain limitation on the scope of the audit prior to audit engagement. So, if that is the case, auditor believes that such a situation will lead the auditor to disclaim an opinion. That is, he would be unable to obtain sufficient appropriate audit evidence. He shall not accept such a limited engagement unless required by law regulation. Right? Now is the case that the engagement has been accepted. Now there is a request for change in the terms of audit engagement. So he shall not accept unless it is reasonable justification. And when can we say that justification is there? So if the request comes from the managed entity with respect to the change in terms of audit engagement and it results from change in circumstances affecting the need for the service. Misunderstanding the nature, there is misunderstanding with respect to nature of audit originally requested. or restriction on scope of audit engagement imposed by management or circumstances. So if auditor considers it justifiable, he'll consider the implication of such restriction on the scope of audit engagement, right? And what can be the situation where it is not reasonable, where the changes relate to information which is incorrect, incomplete, or otherwise unsatisfactory. So, for example, the auditor is unable to obtain the sufficient appropriate audit evidence with respect to receivables and entity. He may ask the audit, and he's been asked that the audit engagement is changed from audit engagement to a one which provides lower level of assurance. That is what review engagement, right? So why? In order to avoid qualified or disclaimer of opinion. So what should auditor consider before agreeing to these things? So before agreeing to these things, he'll see whether it is justifiable or not, and he'll assess the legal and contractual implications, right? So if auditor concludes that it is reasonable, so he'll see whether the work that he's done up to the date of change, whether it is relevant for the change engagement, and his work that now he's going to perform and the report that is to be issued, that should be appropriate to the revised engagement. And in order to avoid any confusion, the report on the related services would not include a reference of the earlier original audit engagement and the audit procedures that were performed with respect to the original audit engagement. The terms of audit agreement which are now changed and agreed upon between the auditor and the management, those shall be agreed and recorded in new terms of engagement in an engagement letter or other suitable form of written agreement, right? Now, again, next topic, you may get a 3 or 4 mark question that there is non-agreement to change in terms of audit engagement and lack of permission from management to continue the original audit engagement. In such a situation, see, withdraw from the audit engagement where possible, unless where possible under law regulation, and determine the obligation, whether contractual or otherwise, to report the circumstances to other parties. Other parties can be those charged with governance, owners, or regulators, right? Now, the next topic is recurring audit. So you may get a 4 mark question with respect to recurring audit. Like you may get a question that you are being appointed, you are again appointed as the auditor of this XYZ Limited. Last year also you conducted the audit. So this becomes what? See, recurring audit is what? When the audit is performed by the auditor over years. This year also you are the auditor. Next year also you are the auditor. So the auditor assess the circumstances that require whether the terms of audit engagement needs to be revised and whether there is a need to remind entity with respect to the existing terms of audit engagement. So if terms of audit engagement were agreed between the management and the auditor last year, first of all, tell me, is there a need to send a new engagement letter every year to the management, to the client organization? Every year, is it required? Others also please require reply. Swati, why are you referring to SA 501 here? Students, I always tell you not to write wrong essay number. ठीक है? See, recurring audit में auditor may decide not to send new engagement letter other written agreement each period. ठीक है? So when the auditor is what is meant by recurring audit? I have told you that when the audit has been performed by auditor over years, right? So the auditor will assess the circumstances that require that the terms of audit engagement be revised and whether there is need to remind the entity of the existing terms of audit engagement. So the thumb rule is not to send each year. However, there can be situations where there is a need to revise the terms of audit engagement and to remind the entity of the existing terms. So what can be those? So examples can be an indication where entity misunderstands the objective and scope of audit. Last year, you got to know that there was a misunderstanding, or the entity, let's say, entity was of an understanding that you will be responsible for some extra work also, which was not within your scope, right? So, if there is an indication that entity misunderstands the objective and scope of the work of the audit work, then auditor may send a revised term of audit engagement. When there are revised special terms of audit engagement this year, recent change of senior management, significant change in ownership, significant change in nature, size of entities business. See, if these are, let's say there is significant change in nature and size of entities business, your area of work is going to increase, your fee structure is going to increase. Recent change in senior management. So let's say management has agreed that they will provide you written representation. Now that senior management or the persons who are going to provide you written representation, they are changed. So you will ask them also to sign on the terms of audit engagement. Change in legal and regulatory requirement. VAT se GST pe, let's say there has been a shift. So why I'm not able to write, just a minute. Change in, just give me a second. Change in legal regulatory requirement, right? So if let's say any additional reporting is to be done, now there has been a requirement of additional reporting is there, for which you are going to ask the management for some extra information. So again, changes in terms will be there. Change in the FRF adopted by the in the preparation of financial statement, change in other reporting requirements. So all this will going to lead to the new audit engagement letter that is being sent to the management or the client organization. So let me just have a look at the queries. So Swati, the essay number is not correct that you have mentioned. Okay. So the last topic that we did that I haven't revised, I haven't repeated, I'll repeat it. Recurring audit. So where the audit is performed by auditor over years, so in that case, the auditor may decide not to send the audit engagement letter each period. However, in the following circumstances, these are the following factors where the auditor may find it appropriate to revise the terms of audit engagement and to remind the entity with respect to the existing terms. So what are these? Indication that the entity misunderstands the objective and scope of audit. There are revised or special terms of audit engagement, recent changes of senior management, significant changes in ownership, significant changes in nature and size of entities business, changes in legal regulatory requirement, changes in the applicable FRF adopted by the company, and changes in other reporting requirement. So in these circumstances, auditor is going to send the terms of audit engagement again. Let me just take you through the module once. So this we have seen. Okay, so these are the various situations where the auditor may resend the revised terms of the audit engagement. Just okay. Now do one thing, go through this test of understanding 7 quickly. I hope SC210 is clear to all of you. Test your understanding on page number 11.24. So Chirag, as part of the article training, is part of engagement team conducting audit of a company. He has read somewhere that engagement letter issued by auditor to client also includes expected form and content of auditor's report. He was at a loss to understand how could an auditor include form and content of report beforehand. Try to help Chirag by making things clear to him. So it says that form and content, expected form and content should be there. But the question is that before conducting the audit, how can auditor give the form and content beforehand. So the answer says that the engagement letter includes reference to expected form and content of audit report. It merely states that auditor would provide opinion in this form. However, engagement letter also includes statement that the form and content of report may need to be appended in the light of audit findings. Therefore, if in the light of audit findings, auditor needs to give a modified opinion, he can do so. Simple. Okay. So, read this test of understanding 8. The management of the entity feels that it is not necessary for it to give in writing explicitly to the auditor that it understands for its responsibility for preparation of financial statement in accordance with the applicable FRF. Discuss whether it is necessary for the management to do so. In case management refuses, why should an auditor not accept the proposed engagement? Read this question again. Test your understanding 8. Quickly. So it says that the management of the entity feels that it is not necessary for it to give in writing explicitly to the auditor. Explicitly is expressly mentioning to the auditor that is understand its responsibility for preparation of financial statement in accordance with the applicable FRF. Discuss whether it is necessary for the management to do so. In case management refuses, why should an auditor not accept the proposed engagement? So see, the answer is yes, it is necessary for the management. Why? Because it is one of the precondition of audit. Why should an auditor not accept the proposed engagement? Now send me answer to this question. Quickly send in your replies. See, let me just take you to the answer of this question. Just a minute. So I'm saying that the answer to why part. This is question number 8. See, 8th question, right? So it is necessary for management to give in writing explicitly to the auditor that it understands its responsibility for the preparation of financial statement in accordance with applicable FRF. It is necessary precondition. Okay. Now, why? What was the next part? That in case management refuses, why should an auditor not accept the proposed engagement? See, if the preconditions for an audit are not present, the auditor shall discuss the matter with management unless required by law regulation to do so. The auditor shall not accept if these conditions to do so. Such a refusal on part of the auditor is necessary. So such a refusal on part of the auditor is refusing to accept the audit engagement is necessary as management is not willing to accept his responsibility for preparation of financial statement in accordance with the applicable FRF. An audit is conducted on the basic premise according to SIF 210. When the basic premise on which audit is conducted is not fulfilled, refusal by auditor is necessary. Just read this paragraph again. Unless required by law regulation to do so, such a refusal on part of the auditor is necessary as management is not willing to accept its responsibility for preparation of financial statement in accordance with FRF. So we are answering to why part, why the auditor should not accept. An audit is conducted on the basic premise according to SA 210. When that basic premise on which audit is conducted is not fulfilled, refusal by auditor is necessary. Is it clear? So the question was with respect to two aspects. First was what? That discuss whether it is necessary for the management to do so. So the answer was yes, it is a necessary condition. In case management refuses, why should an auditor not accept the proposed engagement? So this why answer is beautifully written here. You should definitely go through this answer twice. You will be able to understand as to how you are supposed to write the answer in your exam. Let me just have a look at the query. Om Krishna Gupta is saying clear. Swati saying non-compliance of precondition correct. Then others also please reply. Others also please reply. Shoaib, Sunil, Gangadev. Is it clear? Naman Goel, is it clear? Shoaib Sim, yes. So we are done with essay 210. Essay 210 agreeing the terms of audit engagement is clear, is complete now. We'll be starting with audit quality. Tell me whatever we have done today. That is, we started doing with what? Professional ethics. What is the need of professional ethics? Then we did 5 fundamental principles, that is integrity, objectivity, professional competence and due care, confidentiality and professional behavior. I hope the explanation part, the keywords are clear to you. Then we did independence of auditor, whereby we understood the concept of independence of mind and independence in appearance. Then threats to independence, that is self-interest threats, self-review threats, advocacy threats, familiarity threats, and intimidation threat. And then we saw the safeguards to threat, right? Okay. Then we did the topic of professional skepticism. Okay. And then we started with essay 210, agreeing the terms of audit engagement. I hope that whatever we have done so far is clear to all of you. So the next topic is audit quality. So if you remember, we did a line when we were discussing the point of independence and why professional ethics is required. So we said that maintaining audit quality is the responsibility of the auditor, and for that also he needs to be independent and he needs to follow what? Integrity, right? So the purpose, see, the purpose of independent audit is to enhance the confidence of the users of the financial statements, and therefore we require what? High quality. If the quality of the audit work is high, then only the users are going to have a confidence on the audited financial statement, and it is whose responsibility? It is the responsibility of the auditor. Okay. So student, next we are going to discuss about SQC1 and SA 220. SQC1 is standard on quality control. That is one we are going to study, and SA standard on auditing, SA 220. These are the two standards that deal with what? Your quality control with respect to the audit work, right? SQC1, it applies to all the engagements, whether it is audit engagement, review engagement, other assurance or related services. Students, we have done this in chapter number 1 also. Remember? SA 220, this is applicable with respect to audit engagement only. SQC1, it applies to the entire firm. Why? Because it refers to the firm's policies and procedures. That it is the responsibility of the firm to maintain the quality. So with respect to the audit firm, we have various, you can say, policies and procedures that are given in SQC1. SQC 220, SA 220, this is with respect to the particular engagement team, that while conducting an audit, the particular engagement team need to consider this for maintaining the quality. SQC 1 is for the firm. tell me that whether you remember that in our chapter number 1, we have done this, that SQC1 is applicable to all the engagements, audit, review, other assurance and related services. Send in your replies quickly. Quickly send in your replies. So this will show as to whether you remember chapter number 1 also, when I always ask you that whether you have gone through chapter number 1 till 10. So Swati is saying yes, Naman Goel is also saying yes. Okay. So audit quality, we have seen it is the auditor's responsibility. SQC1 and SA 220 we are going to do. SQC1 is quality control for firms that perform audit and review of historical financial information and other assurance and related services. Okay. So SQC1 is with respect to your, see, just have a look at the name. Just a minute. Here, SQC1. So it is quality control for firms. So when we say it is applicable to the entire firm that perform all the engagement, that is either audit or review. And you all know that audit and review is with respect to historical information only, and other assurance and related services engagement, service engagement. Now, for all those who ask me that, ma'am, how to learn the name of the essays, see, this is very simple. Once you have understood that the that SQC1, standard on quality control 1, is applicable with respect to all engagements and it applies to the entire firm. Now come to the name of SQC1. Just a minute. What is the name? See, read it with me. Quality control. So S, standard on quality control. So quality control for firms that perform audit, reviews of historical financial information. You all know that audits and reviews with respect to historical financial information and other assurance and related services engagements. Is it clear? Are you able to understand the name, and also how to learn the name of this standard on quality control? Quickly send in your replies. See, be alert all the time, Hana. So don't just cram. Learn after understanding. And once you have understood that SQC1 is applicable to firm with respect to all types of engagement, and also once you have an understanding that audit and review is with respect to historical financial information, learning this name is going to be very, 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 very easy for you. Naman is saying yes, ma'am. Swati is saying yes. Om Krishna Gupta is saying yes. That is good. Others also please reply. Okay. So I'll do one thing. Today, though, we won't be able to now as such start and finish with SQC1. So there are various elements of system of quality control. And in fact, there are 6 elements, leadership responsibilities. So let me just show you once. So we are going to do the various elements of quality control, leadership responsibilities for quality within the firm, ethical requirements, acceptance and continuance of client relationship and specific engagements, human resources, engagement performance and monitoring. Okay. So basically it is the responsibility of the firm that the SQC1 is talking about. Firm, say I mean the audit firm, that they need to establish the policies and procedures relating to various elements like leadership responsibilities, ethical requirements, acceptance, continuance of client relationship and specific engagements, human resources, engagement performance, and last but not the least, monitoring. Okay. So we'll be starting with this topic. Starting with this topic from your module and in exact terms of SQC1 in the next session, which is the last session for these revisionary classes for auditing and ethics subject. So students, again, I'd like to request you that before coming for the next session, you must have gone through the entire module till page number 11.24, both the modules till page number 11.24, because we have covered the both the modules in entirety except for SS710 that I'll be taking up in the next session. So before coming for the next session, see students, you can take advantage of these classes if and only if you learn, you revise in as and when the topic is moving ahead in your these revisionary classes, right? So if any of the topics you have left, any of the chapters you have left, try to cover them before coming for the next session, right? And there was one doubt. Whose doubt was it? If that student can repeat, there was a doubt which I asked you that I'll be taking up in the next session. Yes, it was relating to bank audit, standard asset, Swati Singh. So I take that up in the next session along with discussion of SS710. Okay. So again, before ending the session for today, I really want you all to take it very seriously that you need to read the module once, twice, thrice, whatever way you feel comfortable, and you need to learn the keywords. But yes, after understanding, right? Do not cram, but learning after understanding is what I will recommend, right? Any of your doubts, you can bring them in the next session, which is the last session for these revisionary classes. I hope you are able to take advantage of these classes for this subject, auditing and ethics subject, right? So thank you. Good evening, students. See you on Wednesday. Session over.